Hi, everyone. I'm Tremaine Hudson, Senior Accounting Strategist at Cryptio. This panel is going to be all around general accounting, the accounting challenges. I think today we've heard a lot about just audits, the different regulations, FASB, all the different changes. But I think the people that get affected the most outside of the companies themselves are the people doing the books for the companies. So today I just want to introduce Sam Leichman, Blockchain Practice Lead at Propeller, Mackenzie Patel, who you all saw that fantastic presentation earlier, CEO and founder of Hashbasis, Andrea Perlak, CEO and founder of Crypto Accounting Group, and last but not least, Bill Hollowsky, VP at Kruze Consulting. Just to start off today, because I think most people in the room are traditional accountants or finance professionals. For everyone, on the stage, what would you say was like building out your practice, going from a traditional accounting background to a crypto accounting world, and what were some of the challenges that you saw, getting on clients and building out these books? Sam, I'll start with you.
So I think first is just jumping in and saying you can do it even if you're not exactly sure of all the answers. But I think that getting your head around just the high-level words, how are you going to take on-chain activity and bring it to QBO? How is it going to impact the P&L? How is it going to impact the balance sheet? And I think at our firm, we've been around for 15 years. Getting staff to actually be interested in this, people don't get into accounting because rules are vague and systems don't work well. So I think it's really, getting an enthusiasm for the technology amongst our teammates. And I'm not sure if that's answering the question, but.
There's no wrong answer.
Well, I guess for context, at Hashbasis, we pretty much started out as a crypto-native accounting firm, as we call ourselves. So we luckily didn't have to make that switch from going from traditional to crypto. We just kind of jumped into the crypto piece. Now, that comes with its own set of challenges because we might not understand basic fiat accounting. We do now, but that was definitely a learning curve that we had to go through. But just some of the challenges, even though we are more crypto-native, as you heard in all these panels, the landscape is so evolving. The FASB is literally coming out with the new standard on a whole asset class. And so trying to switch gears from the model we have now to the model that's coming up, that's really tough to always keep changing that. And even the IRS with their new notice that, hey, staking rewards are officially now ordinary income and you should be taxing them. People were so confused about that for such a long time, and now we finally have clarity. So those are just some examples of just the landscape is changing very quickly. And I don't think most other traditional industries really face that issue. And then kind of what Sam alluded to, the infrastructure, at least on the crypto accounting side, is still very much being built out. The sub-ledger industry is great, but I think we still have a long way to go to have full support for all chains, to have functionality that actually addresses the new standards that are coming out 100% of the way. So definitely are challenges, but we are getting there, and I am hopeful.
Our biggest challenge at Crypto Accounting Group is that we're doing a lot more than accounting. We're doing regulatory advising, we're doing tax, we're trying to find audit partners that will actually incur the risk. So most of my clients have entities overseas. Actually, yes, all of them do. I get calls almost every week saying this regulatory environment in the United States, it blows. Where should we go? Should we go to Dubai? Should we go to Singapore? Should we go to Liechtenstein, Estonia? These are questions that I got last week. Every single week we have somebody who's looking to go overseas because they want to flee the United States. So if you can't answer that question, what does the Singapore regulatory environment look like? Then you're not providing good service to your clients. So we've really done a deep dive into the regulatory environments across the world, and we've even done it in the United States. So Cody from the Chamber, who just educated us on all of the various bills. We went with Cody to U.S. Congress and met with the congresspersons and tried to understand, are these the people that are going to put us in jail? I mean, when the SEC sends a letter, the SEC chief accounting officer sent us a letter not us, but all of us received a letter a month ago saying that if you are doing accounting in this space, it was essentially like threats. It was really scary. I've never seen an environment where you're getting letters from the SEC Chief Accounting Officer telling you that you are incurring extreme risk by operating in this space. So we have to be more than accountants. We have to be regulatory experts. We have to be tax experts. We have to be audit experts.
All right. Well, at Kruze Consulting, we specialize in VC-backed startups, and so we had tremendous amount of clients referred to us, and we're like, yeah, we'll do it. We'll figure it out. We may not know right now today, but we'll certainly give it a shot. So some of the challenges, that we had early on were like the technology. How do you take the thousands and thousands, millions of transactions and actually record them, track them, report them? That was a big challenge, was just the infrastructure and technology. We're all used to spreadsheets and manipulating those. With the nature of startups, we had crazy business models, and it's like, oh my gosh, it's a crazy idea. Don't know how you'll ever make money at it and what it'll accomplish, but let's work together and figure it out. And part of the challenges we had were the guidance, right? And how do you report and record? And then with our clients, when they go to fundraise for the next series, it's the due diligence and the audits, and how do you represent what's going on, and then help the auditors understand what you're doing and how you're doing it, and then how you actually, report and record and show balances and reconciliations. So it was you're learning on the fly, and it was just and the industry's moving so fast. So those were some of the challenges we had. So.
Nice. I mean, I know from our side as Cryptio, working with all of you, we've had some pretty exciting times, with different clients. Andrea, I know you mentioned the struggles with jurisdictions. I think today we heard a lot about wrap tokens and NFTs and the difference, of opinions on those. What would you say, I guess, amongst yourselves was one particular asset class or protocol or blockchain that you were like, this is really hard? Mackenzie, maybe we'll start with you.
Sure. So I guess kind of expanding that, I know like a type of crypto company that is very challenging, and there's definitely a validator or staking providers, node providers. They're just very challenging because they they tend to support multiple different protocols. Usually they just don't validate on one easy network. They tend to support a whole range of chains. And some of them are your bigger EVM compatible ones, which tend to be easier because most of the subledgers are going to support them. But then they usually also support a whole bunch of longer tail networks, like some in the Cosmos universe, near things like are just a little bit smaller and a little bit less well supported. And so, but I think that gets to a bigger issue, which is the data challenges that I think have been brought up so many times today. But just trying to get historical data for these tail networks is very, very challenging. And I find, especially when I was doing work for a validator provider, that I almost had to become like a software engineer, because I was like going on GitHub and filtering through all these like Genesis JSON files and trying to parse them. And it was just a lot. It was a great learning experience, but it's just skills that accountants typically aren't taught. Like I didn't learn any of this stuff in school. And so I think that is definitely just a type of company or provider in the space that is challenging. Now, I was so thrilled to work on their books. I thought it was very fun personally, but that was just very challenging. And then going to some protocols I think are particularly difficult. One that just always comes up for me is Cardano, because I've had some clients, they weren't using Cryptio, because I know Cryptio is integrated with Cardano. So I was trying to do it manually. And I think any type of UTXO-based chain is very tough, because they have Cardano Scan and then C Explorer, and they're both not great because the way UTXO works, like if I send crypto to Sam, the remainder amount is going to be put in like a new wallet address. And so from the accountant's perspective, it's so difficult to trace through like many block explorer pages and try to arrive at the truth of what's actually happening. So that Cardano is it needs to develop more if they actually want more usage of the protocol.
I'm with you. We have a bunch of Cardano clients, and it takes a lot of getting used to and a lot of digging. One issue we keep seeing, it feels like every week we have a different issue. I don't know about you guys, but it's like, what's my stress point today? But liquidity tokens, liquidity pools in general are very difficult to account for, and you have a lot of custodial issues. So, if someone's giving you funds and then you go and yield farm that, those aren't really your tokens, but depending on whether you put them on your balance sheet or not, are you subjected to the volatility of that individual token? It depends, right? So that's a really complex issue that we're dealing with a bunch of our clients. But I'll just step back because you gave so many great examples, Mackenzie. The macro environment in general, so we talked a lot about the regulatory environment being very difficult, but we've been in a bear market for so long at this point. It's all of our clients have been laying people off. 1 wave, 2 waves, 3 waves. Their tokens, how they fund themselves, are so diluted at this point that it's really, we're all working on skeletal staffs. We're all trying to build despite the environment. And that to me is the most difficult part of being a crypto organization.
So we've also experienced, issues with Cardano. We've got, we want to dig into the ledger explorers because we want to trace, look to see what's happening, validate, and verify. And then our clients, because they're the nature of startups, they may pivot and change, and they might have 20, 30 wallets with different coins, and not all the ledgers. Not everybody supports all the different coins. So it's been just like a general technology challenge for us.
Oh, can I?
I would say that just in terms of type, bridges and anyone who's doing cross-chain stuff is our staffs have their work cut out for them in major ways. I think in terms of the second question, I'm not going to call the L1 out by name, but we encounter all the time technologies that have been built out that are very cool, but the engineers are not thinking about the accountants when they're actually putting their material out to mainnet. And I'm sure everyone has seen variations of this, but you get out and staking occurs, but your staking amount and reward come back in one lump sum, and having to break that out is no easy task. We've worked closely with Cryptio on this particular problem, but it's
Sleepless nights.
Sorry, I was told I have to put in one plug. No, I think again, the big challenge is when we see when everything works great, but when there is an upgrade to the system, when APIs get outdated, things break, and the accountants are the last ones to be told generally. So.
I just want to riff real quick on something Andy said. And I heard someone say one time that when you have a traditional company, they have usually multiple bank accounts, and it's a long, arduous process to actually open a new bank account. And typically, maybe have like one accountant per one bank account, or multiple depending on how big the company is. But with crypto, let's not forget, it's super easy to spin up a new wallet address, which could be likened, it's very similar to a bank account. And so, but usually with these crypto startups, especially with you mentioned more like smaller staffs, maybe have one accountant that's really handling like 300 wallet addresses, and so things are just going to slip through the cracks because you're dealing with hundreds of thousands of transactions and one human behind it all trying to make sense of it. So definitely a challenge.
And wallets that get discovered 6 months into the engagement.
Yeah, if at all, which is my fear.
Oh, I forgot to tell you about that.
A lot of intermingling as well.
Yes. So moral of the story: write the wallets down on a piece of paper. No. So I think one theme generally that everyone's mentioned so far is just around like the knowledge of every single thing that you have to sort of keep in mind. And with all the changing rules from FASB, IRS, Treasury Department, all of these things, like how do you all stay up to date with different regulations? How do you train your teams? Or are there any tools or communities in particular that you like? Andrea, do you want to kick this one off?
Sure. I have a couple of favorites. I am a member of the Chamber of Digital Assets, and that really, they send out these newsletters, and they have monthly meetings where you can keep up to date. I think there are 6 working groups, and that's extremely helpful. So there's one specific to mining, there's a legislation one, then they write like amicus briefs for Coinbase, those type of things. So if you want to get involved, that is a really simple way to do it, and that way you're constantly getting top-notch information in real time. My other way, and my friend Jeff at Cryptio, he has a great LinkedIn feed, and the IRS, the new FASBs that are coming out, Jeff always posts in a timely manner, and I appreciate your synopsises, so thank you, Jeff.
So we also pay attention to, of course, the FASB industry, what our vendors are doing, what our third-party partners. We pay attention to the AICPA and their guidance, their workshops. A lot of my team members use Reddit and some of the subreddit channels, which is great for sharing, exploring, and helping and pitching. And then it's coming to forums like this and working with great partners and sharing with all of you. So that really helps us.
Guys stole some of my thunder here, but I think what you don't do is look at crypto Twitter. I think that LinkedIn is terrific, especially finding folks who are eager to share and post often. It just every time I've downloaded far more material than I'll ever get a chance to read. But I think that is terrific. I think, and again, in real life is, I don't know, I like to talk to people, I like being around people. If you're in San Francisco every Friday, David has a happy hour. But there really is, I think, just there's an ethos for this industry, and just looking around, I don't think you'll get this number of finance people in one room without any assholes, excuse my language. But I think that everybody here is eager to share, and just picking up the phone and saying, hey, we met at CFF 6 months ago, would love to have a chat. I will certainly never say no to that call, and I will bet you that your hit rate's going to be 99% if you've got a question for a smart person that has spoken here.
Yep, I'll definitely +1 to David Bird's amazing happy hours in San Francisco. Definitely was going to mention that as well. And all these things have been really amazing as well. But one thing that I also do is I actually get very in-depth with my customers. So anytime we onboard a new customer, I at least spend 30 minutes to an hour, if not more, just diving into like their specific protocol or their project and just get a really deep understanding of what they're doing on chain. Because if you understand that, then I feel like the accounting maybe is a little bit easier because you understand exactly the mechanics of what your customer is actually doing. And if you don't understand something, then you can reach out to people that you meet at conferences or at happy hours, because it really comes down to just kind of meeting the people in the space. And definitely agree with reading the standards, like read the treasury regs. But I get it, like they're long. If you don't have time, just throw them into AI and tell them to summarize it for you. That's what I do to save time, and it's worked so far.
And couldn't agree with you more. I think what makes our job fun is having multi-clients. Is actually getting to talk with founders and getting to learn about what they're building, what they're doing. I've got plenty of colleagues who work in CPG and SaaS, and they might be doing a dog food company in the morning and doing a B2B SaaS solution in the afternoon. And again, I think the resource of the people we work with is immeasurable.
Awesome. Mackenzie, I think we need a Google Bard sponsor for next year.
Nah, I like Perplexity way better.
Perplexity. Sorry. So I think today we talked a lot about FASB and the new ASUs and fair value. We've even talked about the exceptions to that with wrap tokens, NFTs. How are you all, I guess, thinking about that in terms of your clients getting ready to transition them, and just the general challenges that are going to come with that? Bill?
Oh, boy. Well, it was great to see the presentation by Mackenzie earlier today. We love working with Cryptio with a roll-up functionality. So for us, what we'll be doing is we'll be going back, taking a lot of the information, doing some lunch and learns and training for our team to make sure that they understand what's coming, the guidance, and of course we'll be looking for final approval, more comments, and then the actual timeline rollout. Because we deal with small privates, we'll basically follow the private framework. So we have the luxury of being at the back end or the rear end of the adoption. Our clients that are super excited, want to move, or maybe about to fundraise, we'll definitely look at early adoption in some cases if we got brand new clients where they maybe they've just onboarded, don't have anything yet. Then we'll roll out the new guidance effective immediately. So for those that we don't have a history, if we've got clients that have got 5, 6 years of history, that's a different story. So what we'll do is we'll go back, try to pull all the details, pull all the documentation, and then really, breaking out the chart of accounts, looking at new balance sheets, looking at the impact of the P&Ls, the cash flow statements. So it's really, I think, it's going to be a lot of work to go back and do the roll forwards. But, the thing for us is we have to document and really make sure that we show everything, how the balances were accomplished. And then if we do that, then any fundraising, due diligence, and audits, typically we'll be able to answer most of the questions. So I think right now it's going to be some trial and error and learning. We're going to make mistakes, but hey, you know what? If you're not learning and failing, you're not growing. So.
Please, anybody else?
Like Kruze and Bill, we work almost exclusively with venture-backed startups. And one thing that struck me when these rules got finalized is, to some extent, this is not going to impact a project that is focusing on building something cool with crypto, whether it's a native token, whether it's NFTs. That's going unchanged. And I think, in fact, the new guidelines are actually going to make things more complicated. So if you do have Bitcoin or ETH, now you're going to have to be doing two methodologies for your reporting on the balance sheet, and tracking both cost basis for both. I think this is one of those, it's going to get uglier before it gets better in terms of really streamlining, I think, all of the reporting. But I think we're getting ready to basically change how we're dealing with a lot of stuff.
Just to piggyback on what Sam said, the two different methodologies on the balance sheet, that's really important. So the carve-outs here are a big deal. So if you have your own native token, you don't fair value that. Think about what that means for some of you. I mean, it's one thing if you have VCs and you're investing, everything's come back at fair value. But if you have your own token, it's how you fund your organization. That's huge. You're going to have a huge part of your balance sheet that is at cost basis, and the other part that's going to be in fair value. So apples to oranges, right? It's really important that you, if you have one of these types of organizations, implement early. Don't do it publicly. Start it in October and do October, November, December, because again, we can only do it at beginning of fiscal year, right? So that is going to be a really big deal to have to bifurcate that methodology. Just stepping back and looking at the ramifications, one of my favorite things about this new FASB going forward is it's another threshold that comes, you're decreasing the threshold for other people to adopt widely. So what does that mean? That means like when the ETF spot happens, yay, we're all excited for that to happen, hopefully in the next 45 days. As this FASB comes through and we start to early adopt, suddenly all of the thresholds that were in place for CFOs not wanting to buy BTC or buy ETH or whatever it is, those are coming down. So once we become more widely accepted, more widely invested, then you have your next step of suddenly U.S. Congress is going to want to start to implement some of these changes and start legislating on these things that it's becoming more wildly popular. So I think we're at a really pivotal time in our organization and our industry that in the next 3 to 6 months, we hope that things are going to change for the better.
Yep, and just to add to that, I think there are a couple of practical things that companies can do to get ready for these new standards. The first one being have a conversation with their subledger to see how exactly are they implementing the changes, just because that's going to directly affect your books, your numbers, your roll forwards, basically everything. And it will help you determine if there's any manual work needed on your end. So definitely have a conversation with your subledger to figure that piece out. And I think the other big thing is to really figure out and get down your policies related to certain things. So of course, RevRec is a big issue, but the FASB is staying silent on the gas fees treatment. So if you do an expense, do you want to capitalize, whatever you've been doing so far, just make sure that you have the policy down and you're consistent with that. And even that part I mentioned in the roll forward presentation, if you're earning crypto and revenue and then you're immediately converting it to cash, you can then exclude that from your roll forward. You need to define what does that mean? Like what's nearly immediately? What accounts are we sweeping into? So I think there's just a lot of logistics people need to figure out, and it's best to do that. Like those are things you can implement right now, essentially. So get that in order, get your policies down. I definitely think that is a big thing. Let me sign in again. And one thing that's really important, just make sure your historical data is squeaky, squeaky clean. If you put it off, just do it now. It's painful. It's like ripping a Band-Aid off, but you're going to need your numbers to be completely accurate when you go ahead and do that cumulative adjustment when we all move to fair value. So would highly recommend that.
I'm just one more thing also, and I think balance sheet for any business that has digital assets on their balance sheet as assets is fundamentally broken. And this is not really curing that. And one of the things that we do is we've created this thing called the Statement of Digital Assets, where we actually show the build for the intangible piece at wallet asset pair level, and then bring that to fair market value, or fair value, excuse me. But for the new rules, we will be tracking both treatments in one central schedule that you can basically have a full picture of your liquidity, both at the cost basis and at fair value. And then also we're doing some other interesting things with that I might touch on later.
Awesome. Amazing. Everyone here, thank you so much. I mean, I know for me personally, like this is a very, night and day topic. So really good to hear from everybody here, and everybody stay tuned for the next panel on AML.